Hey everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 12th of May, 2017. The markets finished a little bit mixed this week. Hopefully you had a good week. There was plenty of opportunity in individual names. And let's take a look at the charts, see where we are. We're obviously still in an uptrend. That fact is undisputable here. Higher highs and higher lows with rising moving averages is not an environment to be short, and people are getting slaughtered that do get in the way of the market overall. Of course, there's individual names that are getting hurt, but for now, the S&P 500 is at the top end of this, what's been a recent band of resistance in here, 240 being the top end of that range. And resistance or support is more generally defined by a general area rather than an exact number. So if we get back above there next week, we should continue to see new highs from here. For this week, we did see that we finished below that 5-day moving average, and that 5-day moving average is declining a little bit. That doesn't get us bearish. It only gets a little bit cautious for now. If we were to break below and hold below 237.50-ish next week, then I think that we could be in for a little bit deeper correction here. But for now, because the primary trend is higher, we remain innocent until proven guilty. And the Nasdaq, for its part, finished once again at an all-time high. So hard to argue that that there's anything bearish going on here. We have seen the same story repeated over and over again, that we have higher highs and higher lows on all time frames, and that dips continue to be bought. We have the direction of the 5-day moving average still heading higher, which is why we don't look at this as an opportunity to sell. It's more a pullback within a primary uptrend. The Russell 2000, a little bit disappointing the action in here this week. I was looking at it and had a long position right in here. I had gotten out of it quickly on Thursday morning. I was long based on the volume weighted average price from a couple of levels. One from the most recent pullback, that pullback here in March that we've been holding above, and we still continue to close above that level. And we are also, of course, above the volume weighted average price year to date. It looked to me like we were ready to get going here, as we did make a higher high above a rising 5-day moving average here, but that's not the full story. A breakout, move past resistance, is only as good as staying above that level. Risk management is always job number one. So I'm still looking for this market to maybe right itself in here, but for right now, I think you have to look at it as more neutral than anything. And going back to that daily time frame, we're also right at that 50-day moving average. So it's the middle of the range that we've seen in here. The market's been open 90 days this year, and that year-to-date volume-weighted average price is just below where we are. So I still think that you've got to overall give the benefit of the doubt to the buyers, but it is a little bit concerning here in that if it breaks below and holds below probably 136.50, then it could put a wrinkle in the ability for it to rally, and then we would be back towards the possibility of testing the lower end of where we've recently seen support. So that'll keep you on your toes in the Russell 2000. The semiconductors, though, higher highs and higher lows pretty much every day this week. Here we had a record closing high. So just because it's up a lot, or you might think it's up too much, doesn't mean that it's a sale, or definitely not a short sale. It's better to be on the sidelines in cash, wishing that you were in, than it is to be short a market that's going higher and wishing that you were out. So buyers remain in control. Anyone who claims they can pick a top, I think, is wrong. We have levels that we look at as potential turning points, but as far as identifying a top, no one knows until after the fact. We have levels of interest, and in the biotechs, one of those levels of interest, of course, has been the year-to-date volume-weighted average price, which has been holding on a closing basis since getting back above it in February. We had an opportunity a couple weeks ago for this market to get moving higher, but it broke this support at the 295-ish level, and it remains back in this kind of range-bound market, unable to make any ground higher here. So if we take a look at the weekly chart, it was looking like it had the potential maybe to be holding back above the volume weighted average price from the peak, but instead we closed below it again, and back to that 30-minute time frame here. We've got a declining 5-day moving average. We're turning sideways. To me, it just looks like in a void. Plenty of opportunity in individual names. We saw Snapchat this week, which failed right at its year to date, volume weighted average price since the IPO, right in here. Not exactly, of course, but big movement in a lot of individual names. I'm not going to bore you with all the winners that we had at Alpha Trends, but there's been plenty of them, and I'm sure you guys have a lot of winners as well. The difference might be, and I don't know, but the might be that we have a plan that we execute and implement with discipline and focus more on the individual names than worrying about the stock market itself overall. There's been great opportunities long and short. I expect that will continue to be the case going forward. So if you're unfamiliar with the Alpha Trends subscription product, I invite you to take a look. And I wanted to also let you know that I will be doing a live event with Schwab from San Francisco next Thursday. So I will post some details on that on Twitter and on Alpha Trends. Hopefully you can join that and find some value in it. Thanks for tuning in.